Hi, welcome to the Market Alert for Thursday, the 30th of June 2022, so the last day of June already. Where does the time go? Bonds and the dollar bid as recession risk rise, black gold and break-evens battered. That was yesterday. We had the Three Amigos or Musketeers, whichever way you want to refer to them, out. And of course, the market loved it to begin with, then the reality kicked in. Rate cuts are now starting to be priced in for the December 2022 to March 23 time frame. So rate cuts. So what a surprise. That's probably because of the economic disaster that they're creating. Stocks choppy into month end while bonds rally. And US emergency oil reserves tumble to a record low, 27 days worth of supply. This is an interesting one because it was followed by this. White House is quietly modelling for $200 per barrel oil shock. So again, I've done some of my own sort of projections on this. I will get around to actually covering it, but mine are only up to the $145 area that we had before. But it's certainly going to get interesting as we continue on through the summer with this, and particularly the warmongering now that's going on following the G7 meeting with all of the other countries, Sweden, Finland, etc., joining NATO, Turkey and Ukraine. It's not looking good, is it? But anyway, let's not dwell on that. Let's have a look and see what else we've got today. We've got another OPEC meeting today. And we've got the core PCE price index. This is to show a slight increase there of 0.4 to 0.3 the previous. Gold-silver ratio continues to move to the upside. Expect this to continue as well as they continue to hammer the price of silver, as we saw yesterday and overnight, already heading down for the low. But let's start off with the Dow and have a look at it yesterday. And as the headline said, it was a choppy one for the Dow. So yesterday, a very quiet day compared to the 935 points the market dropped the day before, but overnight prices continuing to move lower. 62% retracement drawn in from here up to here and projected back. They are the downside targets. Like I say, a bit of weakness there overnight at the moment. And the 30-minute chart for yesterday, you can see the market was choppy. The reason it was choppy is because, like I say, the Three Amigos were out. Powell, I'm going to say Yellen then, but she's Treasury Secretary. Lagarde, the criminal, and old Bill Bailey, he was out as well. So, they were waiting. The market was digesting what was happening there. 2 o'clock, they started speaking. I didn't listen to any of it. There's no point because it's so predictable what they're actually going to say. You know, the economy is strong enough to withstand the rate increases, all of that utter nonsense, I'll put it politely. So anyway, overnight we can see that the dollar has moved lower, having the reality come to whatever rhetoric was spouted. So the low taken out yesterday, and or yesterday's low taken out, I should say, and the market sitting at the 30,800. But in the DAX, which we will have a look at now, has traded below the 13,000 psychological level yesterday, continuing to move to the downside, and we're just at 89% as I record this. Let me just remove that 78. You can see the market's just hitting this level. Failure to hold at this level, we'll see prices take out this level here, which is 12,837. We've got to move over to the monthly chart to have a look and see where prices are likely to go, because the weekly chart is already trading in these areas. So we're looking at, you can see there we've got the 12,911 where the market's currently at. 12,672 is going to be the next downside target in the daily chart for the German DAX there. So if you want to put that onto your daily chart or into the time frame that you actually trade, but keep an eye on that one. That's a very important level. 12, just think of it as 12,650. If you want to just remember it, go for a whole number and a big round number. So yeah, the market is certainly weakish there. The 30-minute chart for the DAX also taking out yesterday's low. and also trading down to the S1 already. And in the 5-minute chart, which is where I get all of my starting point of trades from, then I use the 1-minute chart to go down into the smaller time frame, look for the overbought, oversold conditions and the criteria that's in the course, and then trade it accordingly. So that way I can reduce the risk and take those small losses and not even bat an eyelid about it. So yesterday we were oversold into the futures going into the cash, and then the market moved up. They then put in an 89% retracement. Wasn't quite overbought there on, but we started to switch to the downside, and then we came oversold. Get the retracement there, market back up to overbought. Get the retracement in there, back down to oversold. We came up to the S1, market failed, and then of course we moved lower, and then we had a double low here. Well, what I mean by a double low is that we become oversold, and then we get ready to go into the trade, and then the market retraces more than the 89% and then does a shakeout with the volume, but the momentum, as you can see here with the divergence, has actually switched. So when you see this type of price action, you get the resulting move, which you'll see there to the upside. And of course the market then becoming overbought, back to oversold, back to overbought, and then we get into the Three Amigos, and that's why you'll see the market choppy there. And also choppy into the evening, late evening, overnight, the market now moving sharply lower there, taking out yesterday's low and heading down. Like I say, you've got to keep an eye on the monthly chart of that 12,650 is the area you want to be looking at. So at the moment we're only down at 12,890, so a couple of 100 points down to there, which doesn't take a lot of doing. You can also add that into the 30-minute chart and do this with any market. So for example, if I wanted to see this, let me just increase the size of this, change the color to something an orange, and then what we'll do, we're looking for the 650 area, which is going to be just a bit further down. I think this is around about it, isn't it? Yeah, that's it. So down there, I just put that in there, and I can watch and see if the market gets down to this level. There's nothing in the way actually as far as support, physical support to head down to there, and also it ties in with the S3 as well on the pivots, which 90+% of the time the market will stop at this area. So that's why once you start combining all of these things together, you can actually work out the probabilities. It's not going to be accurate, of course, because we don't know how the market's going to unfold, what news items are going to come out. But that's why, again, you have to trade probabilities, keeping your risk small, etc., etc. But at least now I have a roadmap. And it doesn't matter if that doesn't come to fruition, because I know that they'll want to get the market back above the low. So at the kickoff, I also know that should we get it back above that low, there's a good chance we're going to trade up to the DP and then back up to yesterday's high. So I'll take whatever I see as the market becomes oversold, etc., and then take a position accordingly. But keeping in mind, looking at the daily chart, we have this weakness, we take out this level, then it's likely we're going to go down to the 12,672 or just below that, because that's how the markets work. They love that 89%. It's a true Fibonacci number there. Yesterday's trades and the weeks, let's just have a quick look for you. The week so far, 1,582 gross. Nets 1321. We've got a profit factor of 606 or 6, so the average winners are 6 times greater than the losers. Drawdown is small. This is the interesting one, 63%, well 64% to 36, and then you can see profit trades to loss trades, and then the averages, etc. Consecutive wins 8, consecutive losses 3. Consecutive profits 3, consecutive loss 3, and you'll see that it's minus 117 to 547, which is important to keep those losses small. And if you do that, yes, you'll get slight declines, but no great shakes. It's not like sticking with a position and then seeing the equity curve just absolutely plummet to the downside, and then you've got to work really hard to try and get it back. And you see that over the long term from the 19th of January, the equity curve is moving up nicely. There's no major drawdowns or pull downs on the account because I will just take the small losses. I'm quite happy to take those losses, which is why you'll see 53 to 46 or 54 to 46 win-loss ratio. I don't care, because I know by drilling down into those smaller time frames I can keep the risk down. If it doesn't work out, fine. And then if it does start to move in my favour, I will just hold it. And that's how you can have these sorts of days where the market just continues to give you those trades and the potential profits. Okay, let's move on and have a look at the other markets before this video becomes too long. And let's have a look at the S&P and the FTSE 100. So in the S&P, also showing weakness overnight, a lot stronger than the Dow though, and certainly than the DAX. As you can see, the market only at 50% retracement at the moment, just taking that out. If that's taken out, watch the 62, and of course the other levels here as well. Choppy for the S&P for the same reasons that I spoke of in the Dow. So again, you can see the market's taken out. It's taken out yesterday's low. Watch the low though at the open of the futures markets, because they're always an interesting one to see if they'll try and bring the market back. They don't like the low being broken, and if they can bring it back, they will. That's what we saw yesterday. UK also showing a bit of weakness, but nothing like the American markets, and the DAX holding very strong. This hasn't even broken 38% of its last move yet. So a fairly strong market there. It is trading below the 5-bar moving average at the moment. Again, you've got all of the targets for the downside there. Yesterday's 30-minute, again, we kicked off to the upside. The market held a lot stronger than the DAX, only trading down 25 points and then moving up 100 off this one to this one or thereabouts. Well, certainly from the low up to there, just under 100 points. Before we have the climatic volume, we become overbought, we've got divergence, and then we switch to the downside. We've got the crossover there as well, just tucked away off the top of the screen. Market coming down, retracing, and then continuing down overnight, taking out the low 200 MA at the moment in the 30-minute chart as well. So again, use your daily charting combination, and then for entry, I use smaller time frames to enter the market, and thereby keeping the risk low. And then once I'm in break even in the smaller time frame, I'll switch to a 5-minute, and if I can hold it in that, I'll switch to a 30-minute, and then go and find something else to do while the market does what it wants to do. Currency is going to be very brief with these. You can see really quiet again yesterday for the yen. Market has taken out the low in this big bar and then come back, and this is what I'm talking about with the stock market as well. You can possibly see that happen at 7 a.m. when the futures market opens. And the pound down yesterday on whatever comments Bailey made, down at 62% with demand. A bit of a drop off in the momentum there, but at the moment holding at that 62%, so the dollar must be making its way down. Yesterday, not a great deal either. We did actually move down 100 points from here with some weakness, but then became sideways. In fact, the pound's moved better this week than the yen, which is interesting as well. And finally, the metals markets. Well, here we go again. Yesterday we're seeing some demand, we're oversold, but we're coming back down to that 89%. The market held at this yesterday. It's not going to hold here today. You only have to look at the 30-minute chart. This is the reaction yesterday to Powell. The market shot up because he said the economy would be strong enough to handle the rate increases. Complete and utter nonsense. We're going to have to wait for the silver market to move up not until the end of the year. would be my guess, until they start actually cutting rates and then the dollar collapses. So we'll just have to put up with this utter nonsense where they keep crushing the market at the fix at 1 p.m. every day without fail, apart from the odd day in the month. Probably out of the 20 trading days, you're looking at 18 if you go back and have a look. Every day predictable. I just wish I could find somewhere I could get in with a smaller spread and actually trade this every day and hit it hard like they do, and then just trade it for the first hour and take advantage of these moves. But it's finding a broker that's got a really small spread for this market, and because it's not that well traded, you have to trade it on a positional basis, long-term basis. But watch the low, expect it to be taken out. Like I say, $20 is the next downside target. They're going to take it there, whether it's today or in the next few weeks or months. Gold also is desperate to be crushed, as you can see there as well. Its trend is down now. It's just a matter of being able to break through this low to the left here, which is $1,800, give or take. Break 1800. You can see they brought it back last time. This time I don't think they'll be able to. Spot gold in the 30-minute, again, watch the low. You see them bringing it back yesterday on Powell's comments, and then JP Morgan and co came in and absolutely monkey hammered it down. So the comments were positive for the metals market, but the reality is they won't let it go up because they want to show that they've got control of inflation, which is why the dollar keeps getting pumped to the upside. And speaking of the dollar, there's the dollar being pumped up yesterday with Powell's comments. And you will see that we have a retracement of 62 at the moment, between 62 and 78, just holding there. A bit of weakness overnight. But again, you can see that you can have, I should say, the dollar going down and silver simultaneously. So, they create a disconnect if need be as well. And crude oil, OPEC yesterday, well, you can see the market rallying up strongly yesterday. Big move to the upside was then crushed to the downside and holding at the 50 EMA at the 5-bar moving average at the moment. Like I say, for me, we're going to go through the all-time highs of crude oil, that $145. What you're paying now is going to seem cheap going forward as well. They're not done yet with this nonsense. I don't understand why there can be a shortage personally, because there was a small amount that came from Russia anyway. But hey-ho. Right, that's it for this one. Let's see what today brings. Hopefully some more profitable trades. There's certainly some volatility around pre-market, so let's see how it pans out. Okay, that's it for this one. As ever, thanks for watching. See you in the next.